Hey everybody, I hope everyone is doing well and had a good day. This is the overview of the Emini 5-minute chart for Tuesday, November 12th, 2024. I have to be brief today, but as usual, I have closing thoughts, a few things I want to rant about, just important things that came to me that I think are worth sharing. But as always, we'll start with the daily chart. It looks like we're in a bull channel. The market is creating higher highs, higher lows, attempting to break out of the bull channel line and finding resistance. And that's to be expected. Think about how traders behave, how the market behaves when the market is in a bull channel. Traders are selling at the channel line. They're taking profits. So bulls selling out of longs and bears are selling to initiate shorts. And depending on the channel, the bears are either going to scalp or they're going to swing. This rally was relatively strong. There's a lot of momentum, but you can see we have smaller bars toward the top as we test the channel line. So a big bull bar, but then a smaller bar, even smaller bar, and even smaller bar. So we're losing momentum up here, and we know that the market's always in long. However, we're near a channel line, so bull trend, but we might be in correction mode. This is strong enough for a second leg up. The odds are the first reversal will be minor. We have a 5 or 6 bar bull micro channel and a weak sell signal. The odds are there are buyers below yesterday's low, scaling in lower. Maybe buyers below 2 days ago. Maybe it's a spike and channel on a smaller time frame. And this right here might be the start of the channel, which could become the bottom of a trading range. On the 5-minute chart today, let me back up. I think it's important to talk about the context going into the day. So here's yesterday. Trading range open, bear breakout, then a rally, but now the market is in a trading range. And when we just think through price structures and how markets behave and common price action patterns, what you see all the time, traders refer to it as A, B, C, D, and it's basically just leg one, pullback, leg two, kind of like a lightning bolt. And I have an example I want to talk about here, but let me see if I can quickly pull up a decent example. And I prefer to show it in a trading range. So let's see. This could work. I mean, maybe just 2 seconds. Maybe there's a better example. I just want to find one that's very clear. All right, this could work. On this day, we had a sell-off, a pullback, and a second leg down. You can look at it different ways, leg one, pullback, leg two. This still isn't the best example, but the point is a breakout that pulls back and then leads to a second leg in the direction of the breakout, leg one, leg two. The whole point of me bringing that up, and I apologize, that was not the greatest example, and I can find better examples for that in the future because it's important to understand that. But the whole point of that is we had this trading range on the open yesterday, a bear breakout, and then a pullback, and we started to go sideways. And what do you notice about this pullback? You'll notice the same pattern. leg 1, pullback, leg 2. The bull breakout gets a minor reversal, a pullback, and then a second leg up. Now the problem in here is look to the left. Markets are fractal. And you'll see this two-legged pattern just all over the place when you're looking for it. And the reason that's significant, let me just back up one more time. Right here. I could have drawn it a different way. It's just that this second leg is so climactic. Better yet, let me see. I just really want to drive this point home. I think it's worth thinking this through. Here's a decent example. We have a rally that certainly strong enough for a second leg. Then we have a pullback, and the pullback has two legs down of its own. I apologize for the low quality production of this video, but I think it's important to understand this and look for it. The market moves in two-legged patterns all the time, all over the place. We rallied, pulled back, got a second leg. We sold off, pulled back, got a second leg. Even in here, I can't help but see it. And you just see it everywhere. And I don't want to get confusing, but we have a rally, you can say a two-legged pullback, and then a second leg, a sell-off, two-legged rally, which was a pullback of the pullback, and that's where it gets a little bit confusing, but then a second leg down. But the overall stronger trend was up, so this was a second leg and a pullback, and again, maybe not to get off topic, but maybe 50% pullback, testing a breakout point. The overall point of this demonstration is that the market moves in two legs. Leg 1, pullback, leg 2. Leg 1, pullback, leg 2. Leg 1, pullback, leg 2. So with all that, going into the day, there's expectations. And here's what we have today. First few bars, tight trading range, but look at the overall structure going into the day. We had this sell-off yesterday, and that bear breakout is probably going to get a second leg down, and it has not had one yet. We sold off, but then we rallied for a couple of legs. So up here, traders might be looking to sell for that second leg down. So then we got bar 7. Bar 7 is a warning that the price is wrong. Whenever there's a breakout, you can think of it as a gap, a climax, a spike, and there's different terminology for different context. But whenever the market is racing in one direction, the price is wrong. So traders are not willing to buy up here, so the market price has to go lower to find buyers. Are we at the bottom of a trading range? Well, if we are, there should be strong buying down here. Just look over here. Yesterday, bar 14 raced up, but top of a trading range, sold off quickly. 15 sold off quickly, but bottom of a trading range, then we rallied right back up. We're not getting that kind of buying here. We're hesitating. The bear breakout is pulling back, but this bear breakout is probably going to get a second leg, and this big breakout is probably going to get a second leg, and this could be the start of it. So bar 7, even though it's one bar, and maybe you say 7 and 8, breakout and minimum follow through on 8, always in short here, yes, it might be the bottom of a trading range, but it also could be the middle of the range. The bottom could be all the way down here. And until bulls start buying and proving to me that this is a great price to buy at, I'm not looking to buy. Do I really want to buy above bar 8 after a huge bear bar? No. And then what happened here? Traders sell below 7, hoping for momentum. They want a duplicate bar. They want bar 8 to close down here, and then they're disappointed. So bears sell the close, disappointed with their entry bar. They bail out of the trade, but we've trapped bulls up here. So bears sell here, hoping for momentum. They don't get it, so they bail out, and that causes some of the buying. And then you have bulls buying who bought up here. Pick a bar 2, 4, 5, 6. These are all breakout points from the bar 7 breakout. That's going to get tested, and the odds are there is resistance up here. 7 was so disappointing, we may not get all the way back up here. In other words, traders may have been so disappointed with the bar 7 breakout that they'll be happy if they can just break even on the trade. And what does that mean? Let's say they buy below 6, tight trading range, buyers below, not a good stop order signal bar for selling, but then we get 7 and follow through. So what do traders do? Bulls, maybe they get trapped buying below 6, they buy more above 8, and look what happens at their average entry price, this middle line. At bar 9, everybody sells. Bears sell the pullback to catch the second leg down, and bulls sell out of their longs that they were trapped in. That combination of bulls and bears selling leads to a second leg down. We hesitate a little more, but we're still always in short, sort of a tight bear channel. There is a stop order buy above 13, and bears might exit above 13, but look at the follow through, no follow through. So always in bears can sell again below 14, and they did. And there's our second leg down. But now this overall move is a tight channel, a breakout on a higher time frame. And keep in mind, leg 1, pull back, maybe leg 2. So we might be forming a big leg 2 on the higher time frame charts. And that's sort of what we got here. Small pullback, bear trend. We do have open body gaps on the way down, which is a sign of trapped traders. It's a sign of strength for the bears. We know traders are trapped here. That's a body gap. It's actually a legitimate gap from here to here. Body gap there. Body gap 24 till down here, and then finally got retested 29. But who wants to buy 29? After a tight bear channel, the odds are the first reversal is going to fail. This is a breakout on a higher time frame chart. We might be breaking a trend line, but if this is a micro channel on a higher time frame, we know the odds are the first reversal will fail. Traders will sell it for resumption down. It's a bear trend, and trends have inertia. 80% of reversal attempts fail. 29 might be strong enough for its own second leg sideways to up, so maybe bears don't sell right away. But look at the reaction. Nobody bought 29, everybody sold, trying to get a second leg up, but failing. Then we get a 4-bar micro channel. So more disappointment for the bulls. The bears, strong enough breakout for a second leg, sellers above. We get 36, buy climax, but testing an area where bulls just got trapped. If you bought the close 31, you were trapped on the bear breakout. We go sideways, so the bulls trying to get their second leg, but failing, and we're creating lower highs and lower lows. And eventually, the bulls give up. And that's what we had here, 42. 42, I like to ask myself, when I see a big bar like 42, how many bars are we into the bear trend? And the answer is maybe 40 bars. And what does Al say about sell climaxes and exhaustion gaps? If you have a huge bear bar late in a bear trend, and what does late mean? 20 or more bars into a trend. You get a huge bar like 42, the biggest bar of the day, even bigger than 7. That's a warning that this might be a climactic end of the trend. So this might be an exhaustion gap rather than a measuring gap. The higher time frame context supports this. We're in a bullish environment, lots of bull bars, momentum to the upside. We know there are buyers below. So 42 is a bar. You might want to wait for follow through and see what happens. Bad follow through, inside bull bar, bull trend bar, another bull trend bar. Not the follow through bears wanted. Now, the bears hoping this is just a trading range and we start to go sideways at the top of the sell climax, 42. Big down, big up, and we come back down. But what happens? We hesitate here and just below the moving average, and then a bull breakout crossing the moving average. We still have a micro channel, or maybe not. Maybe 47 traded below 46, but still a very tight channel. And this would be a micro channel on the 15-minute chart. And this is a strong looking breakout on the higher time frames. What do you notice about gaps? If a trader sold anywhere with a limit order above 44, 43, 45, if you sold above 45 and you were quick, 47 gave you a chance to exit at break even, and bears took that chance. New breakout, still leg one, probably going higher. And just no reason to sell. Think about always in. Was it always in long here or here? Maybe, but I think clearly when you get the bar crossing the moving average, this big a breakout, it's probably always in long here. Again, with the higher time frames, the risk for the bears, channels evolve into trading ranges, and we don't know where the top of the range is. Bear channel, we tried to break out below the channel, low probability of success. Also look at all the buying before, leading up to it. So the bears try to get a breakout but fail. The next target is the trend line, and the bulls got there. So this can go on a long time. We can get all the way back up here. 54, big bar with a tail. That's a pullback on a smaller time frame. Same with 50, big tail. It's a reversal attempt on a smaller time frame, and traders will buy the close of that bar or that bar. Going a little sideways, but overall, still clearly always in long. Buy for any reason, and just have simple management rules for exits. Maybe get out below a bear bar, maybe get out below 69, but the odds are we're going to start to go sideways here. But we might be in a tight trading range. The trading range may have began here, 57. We broke out, pulled back, channeled up, and now we're in a trading range. So probably support down here. We tried to bounce, but that bear breakout was strong enough for a second leg down. And there is the second leg, climactic bar, maybe 2 or 3 legs down, and then bad follow through for the bears there. I had a couple of comments about yesterday and today, or let me back up. I had a question on Monday about trades I took. I didn't mention any. That's because I did not take any trades. And I also did not take any trades today. And that's part of what I want to talk about at the end of this video. So I will get to that, but I am not hiding the trades I'm taking. I just simply didn't take trades yesterday or today, so I have nothing to share. Stop order trades today, probably sellers below 7. Always in short, low 2 at the moving average, 14. You could sell below there, sell 15, bear breakout in a bearish environment. Sell below any bear bar. And then once you get 42, be less willing to sell aggressively, maybe sell a pullback, but then you get 44 through 46, and that bull breakout is strong enough for a second leg. So just wait for a second reversal if you're looking to sell and you don't get it. So at some point, you can start buying closes, 49, 50, 51, 53, 54. But once it starts going sideways up here, maybe just get out, tight trading range. Maybe you get out below 69. Because this can get a deep pullback. This is overextended. We had a big sell-off in the first half of the day, a big rally. It's big down, big up, big confusion. There's a stop order sell below 69, but you're selling right into the moving average. But if you did sell, think about it. 70 went your way. Your actual risk on the trade is really small. And if you get out above a bull bar, you would not get out until 74. And if you recognize that this micro channel is strong enough for a second leg and that the first reversal up should fail, maybe you hold short and then get out somewhere down here or above 79. Where do we go tomorrow? We have a high one buy signal from today's bar. We rallied, pulled back, and if we trigger the buy, that's a high one. The problem with the high one is we might be in a late leg, so this is not a brand new trend. This might be an exhaustive end to the trend. We're far from the moving average. We're going sideways for 3 bars, so there's not as much of a sense of urgency to get long here as there was down here. So the momentum is slowing down for the bulls. It's also a bad signal bar. The bar closed with a bear body. The odds are there are sellers above today's high. If we fall below today's low, probably buyers below. It's a weak sell. And the bulls need at least a double top, a retest of the highs before we get any major reversal down. At least that is what is most likely. So really quick, I want to talk about systems in general. And I've been doing a lot of work with figuring out my own trading system. And first of all, before I get into that, I'm trying to get back to everybody. I see the comments, and I do want to respond to each and every one, and I appreciate everybody. And the reality is I just have other commitments and responsibilities outside of YouTube, so I'm trying, but please be patient with me, and I will get back to you. And if I miss something, please comment again. Feel free. And the overall point with me saying that is because I have seen comments where people, they're really interested in the trades I'm taking, and they want me to share the system I trade, what kind of system do I trade, that kind of thing. And these are great questions. But the problem, this is what I came to a realization about today. I was talking to a trading friend. I talked to a few other people, and what came to me was I cannot just simply give the answers to the test. And let me elaborate. I'll share the trades I take. I have no problem doing that. And I think it can help spark ideas and help people. But at the end of the day, if you think about the trading day as a test, it's like I'm giving the, quote, answers to the test after the test is done. And I don't mean to say that as if I have all the answers. And, I'm a beginner trader. I consider myself a beginner. I'm really still learning the trading part, because chart reading and trading are two different skills. So with that, I'm happy to share the trades I take. But the problem with that is everybody has their own personality. Everybody has their own wiring. Everybody's wired differently. And so what works for me, what works for Al, for Brad, for anybody, will not necessarily work for anybody. And I would go so far as to say the way they trade would not work for anybody else. And the reason I say that, and I'm confident in saying that, is because, again, everybody is wired at least a little bit differently. And this is why you cannot just buy somebody's system. Somebody says, I have a trading system, it makes $10,000 a month, just pay me X amount of money and you can have it, and then the person can't trade it. It's not that the system isn't profitable, it's just that it's not compatible with the person trading it, and the person trading it didn't go through the work of figuring it out themselves and working for it. And there's laws to the universe, like you reap what you sow, and you really have, what that means is you have to put in the work yourself. You can't expect to watch the video course or pick up Al's books and just magically learn how to trade, and he's not going to give you trading systems to start deploying in the market. So the whole point with this is I'm happy to share my trades and help however I can. But as far as the system questions go and the more specific questions go, there's only so much I can do. And again, there's really no secret. I will share my system. And I forgot I wanted to mention this. And this is part of why I've been struggling the past few days or maybe even few months. I heard Brad say this one time. It was a few months back. And it just got brought back into my mind today. And what he said was, everybody has to build a system that they can trade. And it doesn't matter if you can put it on paper and say, these are the 10 steps to my system and this is how I execute, this is everything. You don't have to make it digestible to other people. When it comes to systems, they're so personal, and it doesn't matter if I lay out every way that I trade. It doesn't matter until the individual has their own deep understanding of the concepts. It's the analogy of teaching a man to fish, because if you give a man a fish, you feed him for a day. You teach a man to fish, you feed him for a lifetime. It's exactly the same with trading systems. You can't just buy a system and expect prosperity and success. You have to do the work yourself. You have to know your personality. Your trading style has to be compatible with your personality. And the trick is, it doesn't matter if anyone else can trade it. And that's what I've been struggling with. I love making YouTube videos. I love providing content, and I love helping others. And I want to do that however I can. But what I'm finding is, it's almost like I'm trying to build a system that anybody could trade, but it's so personal to me. At the end of the day, when I'm honest with myself, it's almost laughable when I sit down and think about what's my trading system, and I'll share it. You can say there's three steps to my trading system or my trading program. Step 1, I ask myself, does the breakout need a second leg? Step 2, enter where I see fit. Step 3, manage however I feel. And that's so vague and so crazy. It's just laughable when I really put it out on paper. This is the way I trade, because I could never hand that to somebody and say, go trade. Because what do you mean, enter where you see fit? Or how do you know if it needs a second leg? Or what do you mean, manage how you feel? But these are all, to me, I believe this is the truth. You have to manage trades the way you feel. And that's why I say, this is why Brad says, Al is an emotional trader. I'm an emotional trader. I take my knowledge of chart reading, and when I take a trade, I have certain expectations. For example, I would never, what would you say? Looking back at bar 7, I would not buy bar 7 if I think we need to go lower. So if I think bar 7 needs a second leg down, why would I buy if I think we're going lower? So does it need a second leg? Yes. That means my options are sell or be flat, but I don't buy for any reason. And then enter where I see fit. There's different ways to enter. You can sell below 7, you can sell on a pullback, but you have to sell because this is a strong enough breakout for a second leg. It may have reset the leg count, the market cycle. We might be getting a big second leg down. There's all these other things, but it's as basic as bar 7 needs a second leg down, so enter the way you see fit. I don't love selling down here because of all the support. Might be at the bottom of a trading range, but 7 still needs a second leg down. So what are my options? This is my favorite one to look at. Where do traders get trapped? Where do they buy more? And where do they exit at break even? So there's a great entry price. Remember, I did not trade today. I see these things, but I'm trying to figure out and formulate rules that I can apply to my system. But the problem is I can't trade with rules because they're too restrictive. And the more you learn about charts and trading and yourself, the more flexible you can be. So, step 2. Step 1, is it strong enough for a second leg? Yes. So now I'm looking to enter. Enter where you see fit. Maybe enter on a pullback. And then manage the way you feel. Okay, I would never sell here unless I thought we were going down. So let's say we sell here, it starts going our way. That's good. I think we're going at least one tick below 8. Am I going to exit above 11? No, that's a minor reversal. What about 13? I might exit above 13, but if we get 14, I'm selling below a bear bar, closing below its midpoint. So I'm short again if I got out. And I'm not sure if I would have gotten out. But now we get 15, and now 15 is strong enough for a second leg, so I'm not going to exit above 16. And I take it bar by bar, and I manage the way I feel. Do I feel like I'm panicking? Do I have to get out of shorts here? Probably not. And look what we got, another bear breakout. Now we have a tight channel. But I'm using the knowledge of chart reading mixed with my emotions. What if let's say I bought up here for any reason, I'm long, and I get bar 7. What kind of emotion am I feeling? I never would have bought up here if I thought we were getting bar 7. So bar 7, you can call it a surprise. It's a big bear breakout. But we know there are trap traders up here. Anyone who is long gets trapped on 7. And how does that feel? Ask yourself, how does it feel if I'm long and I get 7? I'm trapped into a losing trade. I need to get out. Maybe you get out here because this can go a lot further. Maybe you try to get out on a pullback. 9 was your only chance and everyone took it. And it just goes for every single trade. You trust your chart reading. You trust your feelings. You trust your gut. It sounds so crazy, but this is the system that I'm developing for myself. I ask myself, does the breakout need a second leg? I enter where I see fit based on the context, and I manage the trade based on my feelings and emotions. And again, I know it sounds absolutely crazy, but that is the best way that I can explain the way that I'm looking to trade. It feels more comfortable for me. I'm not tied down to any rules. I feel that I can trust my price action reading and my knowledge on that subject so that I can take reasonable trades and reasonable entries and manage trades in a reasonable way. And they're always simple. It's always something, I keep it as simple as I can because there's only so much I can think about when I'm trading. So I'll wrap it up with one more point. When I'm trading, I am not going through the chart the way that I go through the chart on a review like this. Again, it's just 3 simple steps. Step 1, does it need a second leg? Step 2, if yes. Step 2, enter the way I feel, and then manage the trade the way I feel. And I'm not saying this is I can't help but think low 2 at the moving average, but I'm not getting into the nitty-gritty details. I'm really trying to keep it extremely simple. And then I can go into the nitty-gritty details at the end of the day when I'm not trading. So I hope that is all helpful, can be beneficial to anybody. And I will talk more about the system that I'm trading, but please understand that I don't have any magical answers for anybody. And there's really no secret. Everybody's trying to do the same thing. When it comes down to it, you buy at support and you sell at resistance. And, understand momentum and probabilities. There's a lot that goes into it, but you have to keep it simple. And again, I cannot hand anybody a system, but if you're willing to learn how to read charts and put in the work and be patient with yourself and persist and don't give up, then there's just no way that you cannot succeed. So I hope everybody remains patient and can learn anything from my videos. And with that, I will wrap up this video. Thanks everybody for watching, and I hope everyone has a good night.